E-mini yesterday tested Monday's low. Monday was an island top, did not get above yesterday's low, so theoretically did not fully close the gap. I think the open of the week is the most important price on the chart, and today's Friday, and the open of the week is the nearest weekly support and resistance, so I think it's an important price. For the bears, we have a double top neckline. Weekly chart, 7 consecutive bull bars, which is unusual on the daily chart. Weekly chart. Monthly chart, 7 consecutive bull bars, unusual. So this month probably will be a bear bar on the monthly chart, which means we'll probably close below the open. One tick below the open is all that is needed to break the series of consecutive bull bars, and the same is true with the weekly chart. Right now we're below the open, the green line, and we traded below last week's low. This was last week's low. We traded below it, tried to get back above it, could not, and it's 10 points below, 12 points below. Still might get down below last week's low, and we could close the week below last week's low, and then this week would be an outside down bar. Here's the weekly chart. So last week's low is only about 10 points below, so if we sell off for 10 points today, the weekly chart would have an outside down bar closing below last week's low, which would increase the probability that we've started a sell-off. Daily chart in a very tight trading range for 10 or 11 days. Breakout mode. The bulls see it as a bull flag at the moving average. And on the 60-minute chart, I mentioned when we were selling off here that we probably would rally back up here, and the bears would see it as a head and shoulders top. Left shoulder is a top, and then head, and then right shoulder is smaller double top. But every head and shoulders top and most reversal patterns are trading ranges or involve trading ranges, and therefore the probability of a reversal is not all that great. It's only about 40% or so. I leave a little bit early today at noon, so I'm not going to take questions today. Very strong rally yesterday. Usually you're not going to fall very far until you get at least a double top, which we have. So that is enough for the bears to take control. Realistically, after 6 consecutive bull bars, 7 consecutive bull bars, this is probably not going to go all the way down here. Here's last week's low. We traded below it early this week. If today trades down and closes back below that low, that would trigger the head and shoulders top on the 60-minute chart, and it would be an outside down bar on the weekly chart, which is bearish. The bulls would see it as an expanding, they see it as a wedge bull flag, 1, 2, 3. I still think that the E-mini is going to correct between 50 and 100 points soon. I thought it would be in August. It still might be in August, but whatever soon means, I think and we may go up to the 2200, 2220 area. We have this double top on the daily chart, and we broke above it strongly. So here's the measured move, 2220, and then we have a measured move based on the trading range up here, and then we have the big round number 2200 right here. So we have magnets above the market. What I think is interesting here is when everyone knows the market's overbought, everyone knows there are targets just a little bit above, traders wonder, are we going to get to the targets? And traders start to place bear bets. For example, we're not at the target, and I bought put spreads just in case we do not quite get there. And if enough traders start to front run the top, if enough traders start to sell before we get to the top, And if enough bulls start to take profits before we get to the top, we don't get to the top. We could get the sell-off before then. Extremely tight trading here, extremely tight trading here. Usually when the market does something extreme, it then does something extreme that is very different. So an extreme tight trading range, what would be extremely different is an extreme trend. And while I think it's more likely that we get a trend down, like maybe 100 points down, back below the breakout point on the daily chart, the black swan event is the low probability event. You know, we could, there's a chance, maybe a 30% chance, that instead of getting a very strong move down, we could get a very strong move up. So you always have to keep that in mind. Whenever you think something is probable, fairly, strongly, a pretty strong opinion, always think about the exact opposite, because if the exact opposite happens, everyone is thinking like you, and then everyone is positioned incorrectly, and the market can move up very quickly. Double top neckline, target here, and then especially low of last week. Open of last week is the target on the upside. Always in short. We have a bull trend, bear flag, broke below the neckline of the double top, but tail. Let me get rid of that. Don't need that. Don't need this. Is it sell the close? Well, it's not quite sell the close, but we're always in short. A bear breakout far below the bear channel, bear breakout below the 60-minute moving average, decent sized bear bar closing in its lower half. The low of last week is not that far down. We're at 2176, and the low of last week is down here, 8 points below. Bulls see this as just a big double bottom. 1, 2, or high 2, 1, 2. Bears, it's a head and shoulders top. 15-minute chart, left shoulder, head, right shoulder. Globex chart, a trading range, bear breakout, trading range. Bulls see a double bottom, higher low. Bears see a double top, bear flag. Breakout mode, but slightly higher probability for the bears because we had a bear trend leading up to the trading range. Another good bear bar, so it's still strongly bearish on the open. We've had so many reversals, opening reversals over the past month, that traders are hesitant to sell 1 bear bar, 2 bear bars, 3 bear bars. Let me just check. We're below a 50% pullback. That's the 50% pullback of the rally. This is sell the close. But the probability is slightly less than what we normally get with sell the close because the past 10 days here, past month here, so now a month and a half in a very tight trading range, which means if the market goes one way, it tends to reverse rather than continue. And that's on the daily chart. Every bear bar is followed by a bull bar. Every bull breakout is followed by a bear breakout. And that is carried down to smaller time frames, 60-minute chart, 5-minute chart. Moves don't go as far as traders want them to go. All right, so buying above 3 for a failed breakout. Those two bars are big enough. Just look at the screen. They're the best bear bars on the screen, and they're the start of a bear trend. So they're big enough so that we're always in short. Sellers above 3. Even if we get above 1, probably sellers above 1. Like this. It went above 1 and sellers. If it does get above 1, we'll probably get that. And you look at that and you say, that's not fair. Al said it would sell the close. It is. But we've had so many days over the past 6 weeks or so like this where the market makes a very strong move that looks like it should be the start of a trend, and then it reverses and begins a trend in the opposite direction. Right now I think we're always in short, sellers above 3. And probably the best the bulls get is a minor reversal and a trading range. Sellers above, sellers on the close, sellers everywhere. So while it's possible this is the low of the day, I think we're always in short. Now if you sell, where's your stop? Is it 1 tick above 1, or is it 5 or 6 ticks above 1? It's probably better to have it 5 or 6 ticks above 1, or you above 1, and then if it reverses down again, you sell again. Similar to this, very strong bull bar, but no follow through, and it became the high of the day. Can you buy above 1, taking a chance, low of the day? Sure. All right. Right now it's a low probability bet. Probably the bulls would need a trading range before they can begin a trend up, whereas the bears have enough to start a trend down. Sell the closed bears 2, sold more 1 point higher. They tried to sell more 2 points higher, but no fill. Disappointed, sell the closed bears 2, are trying to buy back their shorts, break even at the close of 2. Maybe they sold more 1 point higher and they get a 1 point profit. So this is an important bar. Does 4 close far below the low of 2? In which case the sell the closed bears are not scared. They're not buying back their shorts. They're confident that we're going down to last week's low. Or are we going to get hesitation here, which would be a sign that the bears are not so confident. I'm going to change the scaling back. Still sell the close. No sign of a bottom yet. Let me just check the measured move projection from the neckline of the double top. It's a little bit below where we are. Bad follow through 3, possible bad follow through 5. The market's deciding what kind of an open are we going to get. Are we going to get a relentless bear trend and a big bear trend day? Not likely. Or are we going to get an early sell-off and then a trading range? That is what I think we're going to get. Has reversal attempt 3 and then again 5. So I think we'll start entering a trading range soon. And my belief is in part based upon the early trading ranges that just about most days have had over the past month. Sell-off, trading range, trading range. Not much here, but trading range here for an hour or so. Not much there. Trading range for an hour. We've had an unusual number of days over the past 6 weeks where the market entered an early trading range. Micro double bottom 3, 5, possible low of the day, but probably minor reversal and trading range rather than the start of a bull trend. So when you look at that, you say, wow, what a great bottom. What do you say? This is kind of confusing. Micro double bottom, down 2, down 4, pretty good bull bodies, 3, 5. Confusion usually means trading range. So I think that's what we're going to get. We're always in short. We're closer to last week's low than we are to last week's open. So if we're going to test one of those two green lines, I think this is the one that is more likely. Strong enough rally here, so we have a big up, big down situation, which also increases the chances of a trading range. Can you buy above 5, betting that we'll get a bounce that's at least big enough for a profitable trade? Well, I don't know. The odds are we're going to go sideways, but we've also had 5 consecutive bars down. So I like the bear case better, and I think after we do go sideways, if we go sideways, it's more likely that we'll get trend resumption down before we get trend reversal up. So I think sellers above 5, but stop is above 1. If bears get stopped out above 1, they look for a double top, a reversal down, and they sell again. So this is not a good-looking buy. If I had to do anything at the 5 high, I would sell small and scale in higher. What do the always in bears do? They probably get out because of the micro double bottom, with 3 being a pretty good size bull bar. Well, the bears, double top bear flag 3, but we have big enough bull bars so that bears would rather sell with limit orders 5 high than with stop orders 5 low. Trading range behavior, right? Bears are selling above. We're always in short, but they think at this point the downside is probably limited. So the bears probably are scalping here. Okay, they just got a 1-point scalp. So buyers or sellers below 6? Well, probably buyers below, right? We got reversal attempts 3 and 5, decent bull bars. So this is probably the early start of a trading range. So always in short, but probably sideways for an hour or 2. Can you sell below 6? Well, we're always in short, so you can sell for any reason. But I think there probably are buyers below. You can see trading range price action. We're alternating bull and bear bars. So always in short, but probably not much more down. We still have room to the measured move down here. So, but I think we're in a trading range here. Bull scalpers, just like bear scalpers, sold 5 high. Bull scalpers bought 7 low. They need one more tick. Is 4 still sell the close? Usually after a decent bull bar, 3, it's no longer sell the close. So we do not have to get down to that 4 close. You always, in short, bears probably get out above 5. It did not fall below a bear bar, 7, so they're still out. Early bulls are in, but I think it's too early. I think we're still always in short. But like I said, I think we're in a trading range, and the market is deciding whether 5 is the low of the range or if we have to go lower. Are we always in long yet? I think the bulls need a little bit more, but I also think that the downside is probably limited as well. We're far enough below the moving average to make bears hesitant to sell, and we've had 3 decent bull bars. That also makes the bears hesitant to sell. So we may have to get closer to the moving average before the market does anything. Becoming always in long. One more close like this, probably always in long. Let's say 11 closes on its low, then what? Well, then still always in short, but this is definitely becoming always in long, even though we're still lower high and still below the moving average. This bar is an important one. It's an attempt to convert the market from short to long. Do I still think trading range? I think so. This is, I think, similar to this. And you look at that and you say, wow, that's really bullish. And it is, but it's a bull leg in a trading range. And today might be doing something similar. You know, here we had bad follow through, and it ended up as the high of the day. So what would be different today is we're getting a breakout. You can say the breakout's 10. I think the breakout's the current bar, 11. The bulls need a big bull trend bar. They need a closing on its high, and I think they need one more bar. I still think trading range more likely than bull trend. Bulls trying to get back above yesterday's low. They have to get above the moving average. They have to get above the 60-minute moving average. They have to get above the high of the day. So they have a lot to do to convert this from a bear trend into a bull trend, and converting it into a trading range is more likely. I bought the 7 low and scalped out. I'm flat. I missed buying the 10 high, closing on its high. I should have bought it. I stepped out. I have contractors here. So, given that the bulls need one more bar, what about selling the market here, moving average, low of yesterday, betting on disappointed bulls in our trading range? The math is probably okay. The issue is, is this so strongly up that the probability is not good for a scalp? And I think that's probably true. I think this current bar is important. I think we're probably always in long. It closed well enough. We have consecutive bull bars, 10, 11. I think we're always in long. But I also think that this is more likely a trading range than a bull trend. So we may get disappointment here on 12. Final bar of the hour. Bull's trying to create a higher low. So bear trend, bull breakout, and 2 legs down, a high 2 buy. But big down, big up, big down, big confusion, probably more sideways like this. You can see the hesitation, yesterday's low, especially the moving average. You do have bears looking for strong bull closes coming up from below, and then they sell them around the moving average for at least a scalp. They scale in higher. The bears really need bar 12. If this is going to be a bear trend day, they need bar 12 to reverse 11. They need 12 to be a pretty decent bear bar. Otherwise, this is probably a trading range. New high of the day. Similar to what we had the other day. I think we're always in long. I thought we were always in long the other day as well, but then we got that big bear reversal bar on the bar that followed the high of the day. $60-minute bar trying to create a good buy signal bar. The bar closes right there. So it's a doji bar, so not a great buy signal bar, but it's still on the 5-minute chart a good reversal. Always in long, minimum stop, maybe below 11, probably below 8. So anyone buying up here, you're buying at the 60-minute moving average resistance and the high of the day. So if you're buying up here, you trade small. Odds are, even if we do sell off, we'll come back up to the 12 close at some point. Again, this is kind of the comparable day. We sold off below the breakout bar, but got back to that close later in the day. That triggers the 60-minute buy. At the 60-minute moving average. Let's say we do get the bear reversal bar. What do you do? I think 11, 12 strong enough so that it's better not to take the short. I keep coming back to this. I think today's reversal is stronger. Here we had one big bull bar, and today we have 3. we had a bear bar, and we worked lower, but not strongly bearish. And we got back to that close later. I think today's more bullish. We have 3 decent bull bars, but we're right at resistance. Not a good sell setup. Always in long, buyers below. But because of the big down, big up, we may get a deep pullback here. What about the bear? The bears who sold the 11 close and scaled in higher. Since I think a trading range is likely, I think those bears probably will be able to make money. So what do you do here? Do you buy and put a stop down here? I think the math is okay, but you got to trade small. Do you sell and put a stop maybe somewhere up here, betting that we're going to stall at the 60-minute moving average? I think we are going to stall here, but I think the bull case is better. I think we're going to get down to the 12 low, 11 close to let the sell the close moving average bears get out with a profit. But I'd rather be a buyer than a seller. Probably 60%, 70% chance we've seen the low of the day. Buyers or sellers, 15 high. Well, I think that's an interesting one. I personally would rather buy a pullback, but we're always in long, and we could easily get a third push up, 1, 2, 3. So what about selling? 14 high, 15 high, 13 high. I think there probably will be sellers above 13. I'm less certain about sellers above 14, 15. I think the market will have to go higher to find the sellers. Close at 13 high. Might be some profit takers here. The bears can argue wedge 1, 13, 15, but we're clearly still always in long. Now what about shorting below 16 because of the wedge? I think if you're shorting, it's better to be shorting above bars up here than selling below bars. But if we got a strong enough bear reversal 16, we probably will get down to around the 11 close. This is what I was talking about, potential wedge. What about selling below 16 for a swing, thinking that, yes, it's still always in long, but big down, big up, micro double top, wedge, we could get a deep pullback, deep enough for a profitable short. I don't know. I still prefer to buy a pullback than to sell with stops. Limit order bears made money selling above 1. They have not yet made money selling above 13. They need one more tick. What about buying above 16? Arguing limit order bears are trapped and they'll have to buy back their shorts. Well, they sold above 1. They sold above 13. I would not buy above 15. I would buy pullbacks now, not breakouts. What about buying above 16? I would not. Even though you have trapped bears who sold 13 high, they needed 5 ticks. We've only fallen 4. I think probably sellers above 16. What about bulls? What do? Do they buy here? Well, I would not. I would wait for at least 2 or 3 bars. Let's see if the bears get 2 or 3 consecutive strong bear bars. If so, we may go sideways to down for a couple legs, and we may get down to the 11 low where scale and bears started selling. So they sell the 11 breakout, betting that it will fail. They sell that close near the moving average. And then they look to sell more below a bear bar, below 16. So they sell there, they sell more there. It's actually fairly close. It's only a couple scalps away. And their average entry price is right here. So there probably are some buyers right here. Plus you have the moving average buyers. So these bears sell more below there, and their average entry is bulls, 2 legs down, 13, 17, so a double bottom bull flag, but a pair of decent bear bars. So to me, the picture is getting confusing here. I think while this is a minor reversal, I think we'll probably get a couple legs sideways here, maybe down, might form a triangle. The bulls want to hold above the breakout point here. That would increase the chances that this is going to have a good swing up. Not necessarily today, but over the next day or 2 or 3. And the bears obviously want the breakout to fail, and they want another lower high. Bears lower high. Now they need lower lows, and they want another lower high. So the bears need to get all the way down here. And right now I would say 30% chance we'll get below there, 70% chance we've seen the low of the day. Just because we've seen the low of the day does not mean we have to go a lot higher. It simply means that we're probably not going to go below this low. So we could simply go sideways, or we could go up. So buying 18, a double bottom bull flag 13. We're stalling at the 60-minute moving average. I think you're only buying that if your stop is somewhere down here, or preferably down here, and you have to be willing to scale in. Can you sell 18 high? Well, it's a high 2, 14, always in long above the moving average. I usually do not take that sell. I take the first one above 14 or above 13. I did sell the 13 high, but I don't like to sell high 2s in bull trends at the moving average, especially if the bar 18 has a bull body, especially if it has a bull body closing on its high. Too much risk that this wedge becomes, instead of 1, 2, 3, it becomes 1, 2, 3. Not a very good buy signal bar. So probably we're in a tight trading range here. Again, I think probably better than a 50-50 chance we're going to get down to the 11 close. Any reason to sell here? I think it's aggressive if you're selling here. You're looking for 3 points down to the 11 close, where the limit order bears sold that close, betting that the bulls would not get the reversal. So it's still better to buy, but I think a lot of the bulls want to wait for a second leg down, one pullback, two, so a triangle. However, I think it's okay to be long. Stop down here. And the hesitation is traders are concerned that we may, in fact, get a very deep pullback and that this might be a bull leg in a trading range instead of a reversal. You can see testing 15 close. So you have some bulls that bought the 15 close, scaled in lower, and they're disappointed by 16, 17, and they're trying to sell. So you got bulls selling the 15 close. Minor lower high, but bulls have to be disappointed, right? Wedge 1, 13, 15. The bulls were hoping that we would get one more push up. So 1, 15, and who knows, 25 or something. But this is going far enough out to make it less likely that we're going to go up to a new high without first pulling back more. So this is increasing the chances that we're going to get down to the 11 close, which is at the 12 low, and it's also at yesterday's low. Still always in long. I would not short below 21. Always in bulls, probably get out below 16. I would not buy above 20, but if 23 is another bull bar closing on its high, I think they would buy that. That would be a triangle. We have a wedge top, so I thought two legs sideways to down, maybe one pullback two, too small of a pattern, so probably one pullback two, and because of that, I would not buy the 21 high if I were trading always in. I would wait for a second entry, which we might get here at 23. This is the close of the second hour coming up, bar 24. Last hour, a bull reversal bar, but a doji at the 60-minute moving average, and a confusing picture, up, down, and not strong buy signal bar. So it makes sense that there would be some sellers here. The bulls still have 5 minutes left to the hour, and if they can get bar 24 to close up here, they'll create a pretty decent entry bar on the 60-minute chart. That's not good enough, I think, for the always in bulls to buy again. Maybe they bought above 20. I would not. I would wait to see if we break out strongly above 21 and then buy higher. You can see the bulls are making profits around the 15 close. 24 could not close above the 15 close. So on a line chart, that's a double top. 15 close, 24 close. Let me put up a line chart. It's a perfect double top. still always in long. And for the bears, they're making money selling. They sold above 1, they sold above 13, they sold above 21. So 21 they have not yet made money, but the limit order bears are making money, which you'd expect in the trading range. However, I think a lot of the bears do not want to sell below bars yet. A pair of consecutive bear bars closing on their lows. Can you sell down here? Well, we're still always in long, but I still think we're going down to the 11 close, and limit order bears are making money. Stop order bears have not yet made money. I still think we're always in long. Would I buy this? No, but if we get maybe a double bottom here with a pretty good bull bar 27, I might buy that. I don't think I will. 25, 26 closing on their lows, decent sized bodies, a magnet down here. I think it's more likely we're going a little bit lower. So this is strong enough so that there probably will be at least a small second leg down. However, as I said, if 27 is a strong bull bar, I think the always in long bulls have to buy it. We still have a higher low, and we're at the bottom of a trading range in a bull trend. Bulls trying to get their trend resumption from that double bottom. What about shorting this as a double top? Well, the bulls need to do more, but I'd rather still be long than shorting. To me, this could be the end of the correction. 3 pushes down, 1, 2, 3. Doji, doji, doji. Tail here, not all that big. I don't know that we're going to go a lot higher, but again, I'd still rather be long than short. And I would not sell the 25 high. Obviously, we're finding sellers here, 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 maybe here. I think the bulls have a decent chance of getting back to yesterday's close, and they might even be able to get a measured move up based upon the height of those bodies, or maybe based upon the entire initial sell-off. That would take us back above the open of the week and create the 8th consecutive bull trend bar on the weekly chart, which I think, the weekly chart's already overbought, and that would make it even more overbought. So that would also be outside up, trading below yesterday's low. And if we get up to the green line, the open of the week, that's above yesterday's high. Well, the bears, double top. You can call it a higher high, major trend reversal. But strong enough breakout, good enough context. I think a low probability short. Not a particularly strong breakout, not a particularly strong follow through, but the bull case is still better than the bear case. This might be a trading range that could last for hours. We've had many days over the past month where the market just goes sideways for several hours. And this is a setup for that kind of a thing. big down, big up, big confusion, strong enough rally for follow-through buying, but look at the follow-through buying. It just keeps finding sellers around 2180. Market's still deciding whether it'll close above the open of the week. At this point, it's unlikely to close below the low of last week. But I want to say one point about that. If the correction has begun, there's no proof that it has begun, but if it has begun, the market often has a surprisingly strong sell-off in the last hour. So if the correction has begun, and it might have, this might be a bull rally in a correction, and if so, you could get a shockingly big sell-off at the end of the day. So if we start to see a series of big bear trend bars, don't sit back thinking, no, this can't be. It'll become sell to close with very big bars, which means you have to trade small and use wide stops. However, if this is the start of the correction, it usually will create a very strong, shocking bear trend. So what are the chances of that? Maybe 10%. But because I think we will get a correction soon, it can happen at any point. I still think we're going up here on the daily chart, 2200, maybe 2220, before we get the correction. Double top, major trend reversal, but no bear bars in the past 8 bars, and a doji sell signal bar, probably buyers below. I don't know that we're going a lot higher. We've been in a trading range now for 20 bars, and we could stay in the trading range for the rest of the day, but strong enough leg up, I think it's better to wait to sell until maybe we get a little pullback and then a micro double top. I still think buyers below everything. Stop for the bulls now. It's a little bit easier, below 26, below 19, but I think we're in a trading range, and that means I think we're going to test down. I don't know how far down. Is that strong enough to sell? No, but it is strong enough to provide more evidence of what I said, that we're in a trading range. You can see they bought that. They bought the moving average. It held above the 28 low. This is a breakout pullback buy, but always in long, because of the 20 bar tight trading range, the probability is less. So is it high enough probability for a scalp? Probably not, because to buy one tick above this, you need 6 ticks up, which means you need to break out above the double top. It's high enough probability for a swing, but not for a scalp. What about selling the 35 high if it's not high enough probability for a scalp? I don't know that it's high enough probability for a sell scalp either. The range is pretty tight. Plus, do you really want to be selling above a good bull bar, closing above the moving average and a bull trend? I would not. So I think it's either a swing buy or wait. This is what I was talking about, that as strong as this rally was, it could still simply be a bear rally in the early stages of a bear trend. A lot of times when you're getting a bear trend, you get very strong rallies that make you think the trend has ended and we get a reversal. and yet you get stuff like this. Are we always in short yet? Well, it depends on how this bar looks when it closes. Remember I said it might test yesterday's low again, which it's doing. Bear's trying to get a breakout. If this bar closes on its low way down here, maybe we're always in short. Remember also I've said several times today that I thought the sell the close bears bar 11 could avoid a loss. So they sell that close, betting the market's going to fail at the moving average. Then they look for a bear bar and sell more below it, and their average entry price is right here. So these bears can get out avoiding a loss right now if they want, or they can hold trying to make a profit on this short and get out break even on this short. What about the bulls buying the breakout below the trading range? Excuse me. I would wait to see how this bar closes, maybe wait for the next bar and just see if it's a bull bar. Remember, I said that if the correction has begun, a correction down on the weekly chart, on the daily chart, we will probably get a surprisingly big bear trend one of these days. Is it today? I don't know, right? Right now the odds are against it, but if we start to get 3 or 4 bars that look like this, we could quickly fall below here, and this could be a huge bear trend day. Right now it's still more likely a bull flag, bull breakout, bull flag. Remember when we were doing this, I was saying always in long, but we'll probably get down to the 11 close, or at least down far enough for the sell the close bears to avoid a loss. Probably always in short, right? Consecutive bear bars, especially if this bar closes on its low. It'll be a sell the close bear. The bulls are hoping for a higher low, major trend reversal, bear trend, higher low. So this bar is, I think, an interesting and important bar. Are we going to remain as a trading range day, or are we going to convert into a bear trend day? And as I said, if it's a bear trend day, this could be a shockingly big bear trend day. Is it sell the close? It probably is. Stop above 40. The market's deciding whether this is going to be a trading range day or a bear trend day. And with the close as high up as it is right here, I think we may end up going sideways here. So big down, big up, big down, big confusion, and sideways. If 41 closed on its low, then I think we could have a very big bear trend day. All right, so let's say 42 is a bull inside bar. Can you buy it for the failed breakout? The breakout is strong enough, so probably the bulls will need at least a micro double bottom. So I would not buy above 42. Let me look at ticks. Look at that. Ticks below 1,000, so this is probably not going to be the final low. So we're probably going down below the current low. Because of all the trading range price action, just like you had bears selling here, you have bulls buying here, buying here, buying here, and what we need to know is, will the limit order scale in bulls make money? And if we get a gap let's say we get a bounce here and it does not get above the 19 low, then the scale end bulls are in trouble, and this could be the start of a swing down. In general, when I sell in a situation like this, I scalp part until I'm very confident that there's a bear trend. So right now I am short a small position, but if this becomes obviously bearish, I'll be willing to add and swing a bigger position. Tail 41, doji 42, so far does not look like a bear trend. Higher low, still above the bottom of the bull breakout. In general, if you have a bear breakout like this and then a reversal, you want the market to quickly get above the top of the resistance. It has a better chance of a measured move up if it does. Here, we did that, but entered a tight trading range. On the way down, you want the market to get quickly below support. The bull breakout began at 10 or 11, so you want the market to quickly fall below there. That increases the chances that we'll get a bear trend. That is not what is happening here. So it makes me think that we're in a trading range. We may bounce here, 5 or 10 bars, but I think the odds are we'll test back down. What about buying above 42 or 43? Let's say 43 is a bull inside bar. I don't think the probability is good enough for a scalp with a stop entry. You could always buy hoping it's a higher low and we get leg 1, pullback leg 2, but the odds are against it. Basically buy hoping it's this strong rally, sharp reversal down, and then trend up. Probably sellers up here. But the hesitation, dojis 42, 43, 44, I think make a trading range more likely than a bear trend. If the bulls start to get 2 or 3 consecutive bull bars, maybe this is just a higher low breakout test of the original buy down here. I was short. I bought back my short on 43. I'm back to flat. Still more likely a little bit more down, but I did not want the hesitation. This is that time of the day when the market often has trading range price action and disappoints bulls and bears. Low probability buy, betting on the higher low, a pullback from this very strong bull breakout. Probably sellers up here, but if the bulls get 3 or 4 consecutive bull bars closing near their highs, they will again take control and it'll be back to always in long. Five bars up, but so far no big bull trend bar. However, it's a little bit like yesterday. it's up more than what the bears want. Bulls are hoping that we work higher for the rest of the day for another couple of hours. I still think we're going to test down. Can this be the start of a huge bear trend? It's possible, but not likely. You know, the bears lost urgency with that tail and then these bars. And when you have a strong bear trend or a strong bull trend, there's a sense that, oh my gosh, the market is just running away from me. You know, so if you're not in, you know, it's scary to get in, whereas here it's easy to sell. There's no sense of, oh my gosh, I'm missing something big. I got to sell, but it's moving down too fast. You know, there's more of a sense of confusion, which is typical in a trading range. Big enough up, so first reversal down probably will be bought. So the bears probably will need a low bear flag around the moving average. Bars are small, so might not be enough room for bulls to make money buying 46 low. The choice is right here. Short, stop above 40, stop above 37. Long, to me, it's too early to be long. You know, it's possible higher low and low of the day. So bear trend, bull breakout, higher low, major trend reversal, but not much momentum up. And second leg down after this, likely. Sometimes the second leg down is just, you know, one or two bars like this. Here, second leg down, it formed a higher low. We're pretty much right in the middle of the 2 weekly targets. The low of the week is there. Open of the week is there. So the midpoint of the week is right here. So for the bears, theoretically, they're short, stop above here. For the bulls, they're long, theoretically stop below there. So risk and reward about the same for bulls and bears. Probability, you know, probably about the same as well. I think you only take this short if you're putting a stop above 40 or 36. This is not a strong short after 5 bars of disappointment for the bears. Micro double top, up 46, down 46, up 47, down 48, but a 7-bar bull micro channel, so probably buyers below and more sideways. Always in short, okay to short for a swing, but this is a 7-bar tight trading range, and it's not very tall, so I think the math is not good enough for a scalp with a stop entry. They're trying to get the resumption, but is this going to be the same as up here? 1-bar resumption, you know, 1-bar resumption. I think it probably will. I think there probably are buyers here, and that this is a tight trading range. You know, we might get below 41. If we do, then it'll probably be a wedge bull flag, either using that low or this low or that low. You can see the hesitation, right? So buyers below. after 8 bars in a bull microchannel. The 8, it's 8-bar bull microchannel. The odds of a lot of selling below 48 are not good. The bulls are hoping to break above the 46 neckline of the double bottom and then get back up here. And the bears are hoping that we get a double top 46 at the moving average, break below this neckline, and then fall for another low. At the moment, I'm pretty neutral. I think it's still always in short. But if we do get a strong breakout, it'll flip back to long. I am flat right now. I shorted up here, shorted again here, added to, what did I do? No, I shorted here and did not add to it, wanted to add to it, and bought back my shorts here, and I did not do anything in here. Might end up being a triangle, higher low, lower high. Maybe bear channel there, maybe here. I am not all that bearish. You know, that tail and then the two dojis made me think that we were probably going to go sideways here. I have to leave at noon today. I have some doctor's appointments coming up today, and then again, I think on Wednesday, and then again on Thursday next week. Let me just check. Today, and then Wednesday, I leave at noon, and Thursday, I'm not here at all because I have a morning series of tests that I have to get done. Good enough reversal, down and up, probably buyers below. For the bears, we tested the top of the sell climax, tested the trend line, tested the 60-minute moving average. Bought 3 decent bull bars. So I would not short first reversal down. You know, I'm not confident that there's much more up either. You know, just look at the past 3 hours, right? So I think this is going to end up pretty much as a trading range day, maybe closing around the open, creating a doji bar on the daily chart. Limit order bears sold 46, 1 point higher. They needed to dip below 46 high. Since trading range, it probably will. I have to say I still think it's going to dip below 46 for the limit order bears to make money. It may have one more push up. This is strong enough, so we might get a second push up and then a wedge. 1, 2, 3. I had a limit order to buy the 46 high, did not get filled. Traders who sold the 53 close, betting that we'd get a pullback, it fell 5 ticks, so they made money scalping a short. I'm currently flat. Bears probably sell 53 high for a scalp, but the range is so tight, I think it's probably better to wait. I think we're always in long, but I think it's a bull leg and a trading range day. You know, big move down here, smaller here, smaller here, smaller here. So triangle. Bull's hoping for leg one, pull back leg two, and a move back above the open of the week. So leg one maybe here, leg two there. You can see this low is exactly where it needs to be for leg two to reach the open of the week. That's the magnet above, pulling the market up. It's really fascinating to me how the computers do this stuff, and they make it so exact. So there had to be probably thousands of contracts being bought right there for that price to be perfect like that, or thousands of contracts available to be bought, thousands of computers that were willing to buy. If you add them up at all the firms, thousands of contracts. For the bears, a wedge rally, 1, 2, 3, nested, 1, 2, 3, but the range is so tight that I don't think it's worth selling with a stop. Because this pullback is exactly where the market needs to be for leg one, leg two move, right now I think the odds are we'll probably get up there. Still more than an hour left. Remember, to get to the open of the week, we have to get above Monday's low, which means we stop Monday from being an island top. As I've been saying for a couple of weeks now, I think we're going to go up to the 2200, 2220 area. So I think we have one more push up. We have a tight trading range, first push, tight trading range, second push. So I think we'll get one more push up. Measured move, double top. I think that's the important one. That's a 2220. And then a measured move based on the height of this range, or a measured move based on the height of that range. Let me just check that, but I'm sure it's in the same area. So it's the same area as this one, 2220. Double top here, but I think we're going up there. There's so much time left in the day, we may pull back first. But the odds are we're going to go back above the open of the week. Buy climax, spike, and channel. Might get all the way down here. I would not short. You'll have some bears selling the new high of the day. 3 pushes up, 1, 2, 3. 1, 2, 3, spike and channel. I certainly would not sell at the stop. It's been pretty much a small pullback bull trend, 41, and especially since 49. So I think selling with a stop is a loser. Probably buyers, below 3, 4, 5 ticks below. Can you buy with a limit order here? I think it's always in long. I think this is telling us that we're going to go up here. So I think buying there, stop either here or here makes sense. And for the bears, what do they do to sell? Maybe a limit order sell. Up here, it's too late now, or above 66, 67. I think it's better to be long or looking to buy. This is telling us that the market wants to get up here. So and then with a small pullback bull trend, I think it's better if you have to be in the market to only be long. What do the always-in bulls get out here? They could, right? We have a spike in channel, but I think we're going up here. So if you do get out here, you got to buy above a bull bar. Again, we have an hour left, so we could go like this for 4 or 5 bars and then set up one last rally. Let me just do a quick review of what I saw today. We had a double top yesterday, slightly higher high. Bear breakout on the open, probably a little bit more down. Closing on the low, always in short, definitely more down. 3, possibly an opening reversal low of the day, sellers above. And 5 got close to a measured move based upon yesterday's range. Maybe a measured move based upon this high and that low. Not even that. But anyway, we're in the ballpark of a measured move down. Micro double bottom, big tail, possible low of the day. 10 closing on its high. That was the stop entry buy above 10. And then traders started buying closes, 11, 12. Wedge, 1, 13, 15, decent sell signal bar. 16, probably sideways to down for 5 and 10 bars, 2 legs. I think it's okay for the bulls to get out below 16. If they do, I think they get back in above 28. And then getting out 28, that's tricky. Do you get out here? Probably not. Do you get out here? Probably not. So if you bought above 28, you'd probably get out below 26, which is over here. And where do the bulls get back in? I don't know. I think most of them got back in on 50 or 51. That's why 51 looks like that. Do they get out here? No, I think they're still long here. Limit orders today. It's interesting. Limit order bears who sold the 5 high made money here. We fell 5 ticks. Could you sell again or just not get out here and just hold on to shorts? Theoretically, you could. So you sell the 5 high. Then you look for a bear bar to sell more right there. And then you decide either to get out at your average entry price here or hold to see if it gets down here, which it did not. Trading range trading, weak rally, right? I thought more sideways. Then we get the bear breakout 40, and I thought we had a chance of a huge sell-off, and then tail 41 and doji 42. To me, that was disappointing. Possibly a higher low, a breakout pullback, so bull breakout, pullback testing the original entry price. A lot of times the market comes down exactly to the price where everyone decided the was long. Sometimes a tick above, sometimes a tick below. I think traders started thinking long on the close of 10, and 41 went 1 tick below the close of 10. You can argue that the bear flag was the 9 high, and that 10 was the breakout, and that 41 simply tested the bear flag high. But the bears had their chance, and they could not close 41 on a slow, and then the 2 dojis, and then a 6, I guess it was 7 or 8 bar bull micro channel, probably buyers below, and then a gap here makes me think we're going higher, which we are. And from here, I still think the odds are we're going to try to get up there by the end of the day. Okay, I got to take off, and hope everybody has a good weekend.